We're going to look at accounting for overheads in today's lesson. Now, before we start looking at how to treat accounting, how to treat overheads, right? Now, let us just do a quick recap here. Now, we know that costs are being categorized as material, labor, and expenses. Now, we previously said that we could then further analyze costs into direct as well as indirect. So what are costs that are direct? Direct means they are specifically attributable, or they could be specifically identified with a product. That's a direct cost. So we can have direct material costs, direct labor costs, and direct expenses. And all these direct costs, we will lump them together and we will call them as prime costs. Okay. Now, on the other hand, right, we can have costs which cannot be directly identified to a specific product. So we call them as indirect. So the other word for indirect cost is overheads. So we could have an indirect material, indirect labor, indirect expense. These are the indirect costs. So we would just lump them all together as overhead. Now, because these are costs that still relate to product, then we would actually call it as production overhead. Now, and still we can have those overheads that they are not related to production. Now, these are like administrative costs, selling costs, that we will call them as non-production overheads. Now, you can see the chart here that we have some so-called a more complicated part where we talk about allocation, apportionment, and absorption. Now, what exactly is all this? Please just wait for a while and then we'll come to that shortly. Now, so a quick framework to show you how we compute or we calculate the cost of a product will be in this manner, yeah? So we have all the direct costs. Now, because these are direct costs, that means you can determine directly how much is the cost per unit. You understand? So if costs are direct, you will be able to tell me that, okay, to make a product, that's the material cost per unit. You will be able to tell me because it's a direct cost. Now, but when you can't tell me exactly how much will the cost relate to a product, right? Now, then it will become indirect. For example, if you're going to hire a supervisor and you're going to pay this supervisor, for example, $5,000 a month to supervise the entire factory. Now, how much of that $5,000 directly relate to the product? Now, you realize that that's something you cannot directly identify. Well, that's why the supervisor's salary will become an indirect cost. Okay. Now, so the first part is we need to identify. We need to identify how much is the direct cost. Now, that will give us what we call as the prime cost, right? Okay. Once you've got the prime cost, then you will need to identify the amount of the production overheads. Okay, the amount of the production overheads. Now, that alone will give us what we call as the production cost. Okay. Now, for example, again, when you look at the production cost, right, you can have the direct production cost and you can have the indirect production cost. Now, we don't call these as direct production costs because we would call it as the prime cost, and we don't call it as indirect production cost. Rather, we will call it as production overheads. Okay. Now, prime cost, if you want to find what is the unit product cost, okay, that means you want to determine how much is the cost for a unit. All right. Now, prime cost, you have no problem to identify what's the amount per unit. You don't have a problem. Now, but overheads, you're going to have a problem because the overheads are never expressed as per unit. So there'll always be this question, how to get to the per unit, the cost per unit. How do you get that? Okay, now we're going to see that shortly. Now this side of it, right, will give us the production cost, but there'll still be a non-production cost. That's why you see all the costs that we have in the business, we know that they can be classified into production costs, and then we can also classify them as non-production costs. So how do you treat production costs? We've just explained. You need to find what is the unit product cost, and by doing that, you need to find what's the prime cost and what's the production overheads. But on the other hand, for the non-production cost, we also need to find a way of charging the non-production cost into the product so that we could work out what's the total cost of the product. Because when you sell a product, you don't just take into account the product cost alone, because the selling cost can also be a significant amount. So you do need to take that into account. Okay, now that's a little bit about how we do cost analysis. So now I would like to bring you into overhead analysis. Okay, I want to bring you into overhead analysis. Now, overheads, or like what we said just now, these are the indirect production costs. So these are costs that they don't directly relate to a product, but we need to find a way so that we could allocate the cost to the product, so that by doing that we will be able to determine how much cost that product is going to be, and with the costing we will be able to determine what price you want to sell and so on. Now you got to imagine it in this manner. Okay, now just start with something simple. Okay, in a factory, right, you will probably expect there are many stages, okay, of production or processes. There are many stages. All right, so you will have to probably go through a first stage, a second stage, and so on. Okay, now we're not really into what kind of factory, but we could fairly imagine that, okay, your product will go through many stages. Now let's call these stages as a production department. Okay, so imagine that a product has to go through 3 different production departments before they can come out as a complete product. Okay, so can you just imagine that you have like one department here, one department here, and one department here that they will have to go through. Okay, now you will have many products. Okay, you're making, let's say, many different kinds of products, so that all these products will actually go through one stage, second stage, and then come out as a finished goods. All right, now before we look into that, but I would thought that this is a good time that I could just explain it to you. Now sometimes you could have a department that is not involved in the production, but they tend to serve, for example, certain processes in the factory, or serve the people in the factory. Now, for example, I can have a canteen. Okay, now canteen is not a production department, but canteen is to provide feeding the workers, the people. So the people will go to the canteen and eat. Now, so these are what we usually call as a service department. Okay, a service department. Now, forget about the service department first. Okay, forget about service department first. So let's just imagine if I make product X, Y, and Z. Okay, now at the end of the day, what I need to know is how much is the production cost for X, Y, and Z. Now we know that the direct cost is never a problem, because you know exactly what is the cost per unit. Okay, but what about the production overheads? Now you see, if you're going to look at and like making life easy, right, you might be saying, okay, how much is the total production overheads that you spend for that particular period? So assuming if I tell you that I'm going to spend like $500,000, and then if I just tell you, okay, why not just take the $500,000 and then we find a way and apportion them into X, Y, and Z. Well, you can do that, but you know it will be less accurate. So the important thing that we need is about accuracy, because in business, the accuracy underpins the decisions. The right decisions that you derive comes from the accuracy of the information. So the more accurate you could analyze the cost, the better the decisions you're going to make. Okay? Now, back to this. So it's not going to do a lot of good by just taking 500,000 and just go straight to all the products, because it does not give what we call a true picture of how the costs and the products relate. Okay? So one way that we could make it a little bit more accurate is to further analyze these overheads by going back into all the departments. For example, we will say, okay, how much of the 500,000 relate to this department? How much of the 500,000 relates to this department? How much of the 500 relates to this department? So that's what we're trying to do. We're trying to take the full amount and then split it into all the individual departments so that we will be able to label them and group them or aggregate them together. Then later we would use some association, and then we will use that basis to say, okay, this is the amount of overheads that goes to product X, Y, and Z. You get the idea? Now, if you get the idea, right, so now you will be able to understand the rationale of this example over here. Now, you see, we have these questions that we say Massive Limited has 3 production departments in the factory. So there's Department 1, Department 2, and Department 3. Now, Massive provided you the following cost budget for the period ending 30th June 2007. Okay, why is it a budget? Now, because whenever we do cost analysis or costing, we always do it in advance. Now, when we're doing things in advance, we don't have the actual figure, so we're going to use a budget. Then from the budget, we'll estimate the cost, which is the right thing to do. I mean, if you do a business, you can't wait until the end of the period and then only you start calculating the cost and then you start selling the product. Am I right? You would have started everything way beforehand when you do business. So it's all going to be based on budget. Now you can see right now, right, I have already identified for you that in these 3 departments, how much of the material cost, the indirect one, the indirect material cost that we have incurred for Department 1, 2, and 3. How much of the indirect labor costs that we've incurred for Department 1, 2, and 3. So we can identify specifically to each of these departments. But there are costs that we don't actually can identify them to all these departments yet. For example, there are 3 things. There's depreciation, there's electricity, there's factory rental. Okay. If I'm going to ask you to think logically and then say, what would be the basis if I ask you to apportion this amount of these 100,000 goes into all these 3 departments, what would be the basis of how you would apportion? Now, I give an example of the idea of apportionment, okay? Okay, now let's say you go to, let's say you and the 3 of your friends, so the total 4 person, okay? And 4 of you went for a restaurant and had a meal, okay? And then at the end of the day, the total bill comes to, for example, $120. Now, how much do you think each person will have to foot the bill? Now, some of you will say, well, it's kind of like easy. since most of us eat more or less the same thing, we all order one set of meal, we all order one drink, let's just divide it by 4. That means you believe that the factors to apportion the cost is based on the number of person, which is fine, okay? But sometimes you will say, hey, but no, you know, James, he took more, he ordered the double portion and he ate more, and how could all of us be paying the same amount? Yeah, you have a point, and then you start to say, let's not use the number of person to do the apportionment. Let's base on the meals consumed. So you say, how many meals have you consumed? So if each of us consumed in total 6 meals, we're going to divide it by 6, and then for a person that have just consumed 1 meal, you pay 20. If you've consumed 2 meals, you're going to pay 40. Makes sense. Now, at the end of the day, right, we just want to come to a logical basis that allow us to have a fairly okay, fairly acceptable manner to apportion the cost. So we would say these are the depreciations of the assets. Why would a particular department has greater amount of depreciation? So one of us will say, well, the reason is because you have more assets, so you carry more depreciation, which makes logical sense. So what questions normally have to do is they will have to feed you with another table and give you all these additional information. Now, you see what kind of information that they've given us. They've told us about the net book value of your plant machinery, the floor area. I presume this must be the area for the factory. They also gave you the electricity usage. They give you the labor hours. Now, if you're going to choose a basis that will be fair enough to apportion depreciation into the individual department, where the factors will point to you and says that you will have bigger share of depreciation because of this particular factor. Now, which one would you say is a fair basis? Now, for example, would you say, because my floor area is bigger, I will take more depreciation? Now, that does not sound quite logical, because why would a big area have more depreciation? Not necessarily true, okay? Now, then what about electricity usage? Now, you might say that the more electric I use, the more I use my machine, the more that it should be depreciated. Well, maybe there's some like sensible point there, but again, not all depreciation is used, or not all assets are running on electricity. Now, you see, what about furniture? Furniture is not depreciated according to the electricity usage. So in that manner, we find like maybe electricity is not the best way according to all these informations that we have. So we would possibly come to the point and says that, you know, the net book value of your plant machinery seems to be the best, because if you have more assets, you will naturally have more depreciation. Am I right? I mean, you just make a simple comparison. If you have 1 million worth of asset, and if you have 5 million worth of asset, even if the depreciation rate is the same at 10%, a million will give you 100,000. 5 million will give 500,000. So that makes sense, right? So we would use this net book value of plant machinery as a basis to apportion these overheads. Now, what about electricity costs? Now, I think you can now say that, oh yeah, that's easy. I would relate electricity costs straight to the electricity usage. And I guess you will be able to tell me what's the better usage or better basis to apportion rental. You probably will say the bigger area that you've occupied, the more rental you should take. Now, we have just determined all the bases. So now we have a basis of apportionment. Why not we jump in and start doing all the work? So let's go down to figures right now. Now I'm going to, present it on Excel, but of course, You know, in exam, you may not have that Excel, but the way you work is the same. The only difference is Excel just help me to automate a bit in terms of the calculations. Okay, so now I know the requirement is asking for overhead absorption rate, but even before I do that, I'm going to do an overheads analysis where I will carry out the allocation and apportionment. Okay, now what happened right now is I have a couple of items. I need to determine what is the basis of apportionment, and that's the total. And now we have production department 1, and then we have production department 2 and department 3. Okay. Right. Okay, indirect material costs. So I am told that you have 75,000, but because these costs have already been given directly to us, so we can go straight in and allocate. So that's an allocation. Okay, so we just allocate straight into the respective department. Indirect labor costs. Again, we're doing an allocations. The amount is 60,000. So this is 10, followed by 20, followed by 30. Okay, now then what about the depreciation? Now we're going to use the net book value of assets. The value is actually 100. Now how do you do the apportionment? Now you're going to use the net book value, right? Now if I'm just going to use like a small little workings, I'm having 1 million out of 6 million. That's the total that I'm having. And then my depreciation is actually 100,000. So you're taking 1 out of 6 multiplied by this. That's the amount that you're having. And then you're taking 3 out of 6 multiplied by this. And then you're taking 2 out of 6 multiplied by this. And we have to round it, let's say, to the nearest dollar. Okay, I don't really need the decimal point. Now, the electricity usage. What would be the basis of your apportionment? So the basis of your apportionment in this case is going to be your electricity usage. Sorry, it's actually electricity cost. And the total amount is actually 50,000. So I have my electricity usage. Now it's actually 10,000 out of 30,000. So you're going to multiply that with 50K, right? So if you take this multiplied by 10 out of 30, this will actually give you the figure. And this time we will take 8 out of 30, and then we have 12 out of 30. So again, for rounding purpose, right, finally we have factory rental, and the rental will be a portion based on floor area. So my factory rental cost me 80,000. And what's my floor area? So I'm having 50,000 out of 100. I don't know whether it's square meter or square feet or whatever. So on the other hand, you have 30 out of 100, and finally you have 20 out of 100. Okay, so this will be the total overheads that you have allocated and apportioned. So let's see if I could just add this up. Here. Okay. Okay. Now, you have just identify how much of the overheads that goes to each of these departments. Now, using back the example that I've explained to you earlier, I say that if, let's say, the overheads is about $500,000, how much does that $500,000 goes to each of these departments? So right now, it's like I'm giving you another example, which is a different set of figure, that the amount of the overheads that goes to department 1, 2, and 3 comes to this amount. Okay, so now we have another thing that we need to know. We need to get a way to charge, or the word we usually use in costing is absorb. We need to find a way to charge or absorb these overheads to the products that we have produced or made. So there are many ways of how we can do that. Now, for example, we could just like divide the production overheads by the number of units they produce. Okay, so it's like we just take whatever amount of overheads that you have, divide by the number of units that you've made. But you see, if you're just going to divide it by the number of units that you've made, then actually what's the point of you going through all that hassle to distribute overheads into each department? Because at the end of the day, the number of units are the same, you see. So whether you divide it out and then you apportion them in department, then you divide by the unit, or you do it in total, at the end of the day, it's still going to be the same. So why go through that hassle if you just want to divide it by the unit? So we think that it's always better to make it more accurate, and that was the whole reason why we do all these kind of apportionment and allocation. So what we should do is to get something better, so that we could more accurately relate the cost to each product. So is there any ways that allow us to more accurately relate the overheads to the products? Now, example, some say that, okay, why not we charge the overheads based on the machine hours that each product use or spend in these production departments, for the basic idea that the more machine hours that you're going to use, the more overheads you should be taking up. So likewise, if you find that, okay, if machine hours is not the most ideal thing, then we could always say, why not we use other bases like the labor hours? So all that we call as factory floor or production related bases. Okay, these are bases that they relate to production, because the general idea is the more you produce, the more machine hours you're going to have, the more labor hours you're going to have, the more production units you're going to have. So that's why it's called factory floor or production related. Okay, now that by itself has its own drawback. That's why in the future we're going to see that there will be another approach for overhead analysis, which is argued to be more accurate, that is called activity-based costing. Okay, so now we have these in mind, that we want to find a way so that we could charge these overheads into the products. So we saw from the question that they've given us the labor hours that they've estimated in each of these departments. So somebody has told us that the direct labor hours that they're going to use, they're going to spend in Department 1 is actually 40, 20, and 20. So we actually will get the overhead absorption rate per the direct labor hour when you take this divide by this. Okay, we might have to maintain a bit of decimal point. Okay, what does this rate tells us? What does this rate tells us? Now, for example, we can say that it is estimated or budgeted that when a product use 1 direct labor hour in production 1, production department 1, it is estimated that $2.958 of overheads would be incurred. So the logic is we should charge 2.958 to the products. Okay, now, so let's say if I tell you that I make a product X, that the prime cost of product X is actually $32, but at the same time I'm telling you that this product X, they will spend direct labor hours in the production overheads for production department 1, production department 2, production department 3. Now let's say I'm telling you that this product will spend about 3 hours in production department 1, 2.4 hours in production department 2, and about let's say 4 hours in department 3. So what we will do, right, we will say, okay, if the rate is this and you tell me that you're going to spend 3 hours, that means we would charge 8.875 into the cost. Now likewise, if you tell me that the rate for department 2 is this and you're going to spend about 2.4 hours, and finally for department 3 you're going to spend 4 hours, now that would be the estimated production overheads that we're going to have. Now, so we would then be able to come up with this so-called conclusion that the total production cost of this product X is actually $48. Okay, so that's the total production cost that we're having. And again, if based on the total production cost, we can work out how much is the total cost. We can use that to determine the pricing. So what I have covered with you in this lesson is to share with you the rationale of why we need to do an overhead analysis so that we will be able to identify the cost of a product. And in the midst of doing that, we discovered that there is a need for us to more accurately determine how much cost relates to a product, so we have to do this overheads analysis. Now, I'm going to stop here because that's just good enough for us to have one session. And the next thing is actually to understand deeper about what happens if we have a service department. Remember, I've told you that there's some service department. How are you going to tackle that? And because all these things are done based on what we call a budgeted figure, so how do we deal with the results reporting when the actual figure is different from the budget figure? What is an over absorption and under absorption?